In this video, I'll show you a secret scalping strategy that should not be for free on the internet. This strategy includes free trading view indicators and a smart money management system you can implement right away after watching this video and start making some really good profits. And to prove my point, I will backtest this strategy 100 times with an initial account size set at £1,000 and 2% risk per trade. This trading strategy is called the Davos box, and it was discovered by the famous stock trader Nicholas Davos. Okay, so we're going to do our backtesting on a Bitcoin USD 5-minute chart, and now let's go ahead and add our indicators. So for the first indicator, let's add Davos box by this creator, Kivans Osbilchik. For our second indicator, let's add Mavelim W, this one right here. And lastly, let's add RVI, or Relative Vigor Index, to our chart. Okay, so now let's double click on this Davos box. We're not going to change the inputs. We're just going to make these lines more visible. So let's add more opacity. Now let's change the settings for this moving average. So first of all, we're going to change the colors. Okay, there we go. Now our system is ready. Let's get into our trading rules. Okay, so the whole idea behind this Davos indicator is to keep us away from the choppy markets. So we're only going to be looking to buy or sell when the price actually breaks through this box. And to eliminate even more losses, we're going to be using this Fibonacci weighted moving average that is created to identify the levels of support and resistance. And lastly, we have this relative vigor index on our chart on the default settings, which will serve us as an exit indicator. Okay, so the rules for entering a long position are very simple. So first of all, we're waiting for the price to cross and close above this Davos box. Also, the price needs to be sitting above this moving average. And once these two conditions are met, we're going to go ahead and take a long position. Set our stop loss at the recent swing low. And if the price moves in our favor and we have a winning trade, we're going to close the position as soon as we have a signal from our RVI indicator. So these two lines have to cross in a way so that the red line is above the green line. Okay, now let's see how well this trade performed. Okay, so we just had a cross from our RVI indicator. So now we're going to close the position on this candlestick right there. We see our risk to reward ratio is 1.41, and since we're risking 2% of our account per each trade, on this particular trade we would have made 2.82% profit. The opposite rules apply when entering short trades, so the price has to cross and close below this Davos box. And the second condition for a valid short signal will be the price sitting below this Fibonacci weighted moving average. So once we have these two conditions met, we're going to go ahead and take a short position, set our stop loss at the recent swing high. And if the price moves in our favor and we have a winning trade, we're going to close the position as soon as we have a cross from our RVI indicator. So the green line has to cross above the red line. Okay, now let's see whether this trade was successful. There we go. We just had a cross on this candlestick right here. Okay, so we see the risk to reward ratio is 1.34, and on this particular trade we would have made 2.68% profit. Here's another example for a long trade. We see the price just crossed and closed above this Davos box, and it's also sitting above this moving average. Now we're going to go ahead and take a long position, set our stop loss at the recent swing low. And we see our exit indicator is giving us a bearish signal already, but we ignore this signal and take a trade anyway, and wait for a new exit signal if we have a winning trade. Okay, so here we have a new exit signal from our exit indicator, but we do not exit this trade because it's running in loss. We first need to have the trade to be profitable and then exit the position as soon as we have a new exit signal. Okay, so here we've got a winning trade, and now we see we've got a signal from our exit indicator to close the position. Okay, so we see our risk to reward ratio is 0.76, and since we're risking 2% of our account per trade, on this particular trade we could have made 1.52% profit. Here's an example for a short trade we would have skipped. So we see the price just crossed and closed below this Davos box, but it's still sitting above this moving average. So we do not wait for the price to cross and close below the moving average, we just skip this trade altogether. Okay, so now you have a full understanding of how to trade with this system, so let's actually backtest it 100 times and compare the results to some other systems we've already got on our channel. Okay, so I just done my backtesting, and as we can see, the results are very impressive. Our win rate is 66%, which is the highest we've ever had on this channel. We also increased our account size by 107%, but bear in mind I didn't include the spreads and fees in the backtesting, so the results will be different when trading live. But one of the most important things I want to mention in this strategy is our risk management. We see how many times we had trades that got us really massive profits, and this is because we didn't set a specific take profit target. Okay, so we can see in terms of win rate, our strategy is actually on a first place. 66% is really high, and I believe we can improve this strategy even more just by adding a volume indicator to our chart. So yeah, I would definitely recommend this strategy. Go ahead and backtest it and forward test it on different markets and see how well it performs. Okay guys, I hope you enjoy these videos and appreciate the work I'm doing on this channel. And the only thing I'm asking in return is for you to spend 2 seconds and like this video. And if you want to see more videos like this, then feel free to subscribe to this channel, and see you in the next one.